This week we cover good news and bad news. Alex, what are the questions?
How is the economy really doing now? What was the bad news this week? Portfolio strategy, what's working and what's not working, and what assets historically are the most effective inflation hedges?
This could be your key to making great decisions in the year ahead, so stay tuned. Welcome to the May 18th, 2026 Advance Report for McGowanGroup clients. I am joined by Alex Tolene, President, McGowanGroup Wealth Management. I'm Spencer, as you may know, and we want you to subscribe because we're going to cover some things to help you make great decisions in the year ahead. The title of today's program, The Good News and the Bad News. Now, we're going to go through sequentially some really good news and some really bad news from this week, the market reactions, and then strategy. Alex, what's this first chart that we have right here?
All right, so how is the economy really doing now? If you look at Atlanta Fed GDP Now forecast, which Spencer has been actually very accurate over time, they're not always perfect, right? But they're coming in at a 3.7% expected second quarter GDP growth. We're halfway through the quarter right now. As they get new data in, they update that forecast, but that is really strong.
Now, here's why the market shrugged off the inflation, which we're going to get to. Right? Because the inflation report, normally you get 6% trailing 12-month inflation for producers. Wow, you would send the market, the Dow would go down a couple thousand points on that, but it didn't. And I think this is why. Cover it for us.
This is right. 453 companies reporting the S&P 500. Earnings growth, a robust over 25%. Revenue growth, 10.5%. We haven't seen numbers like that in a long time.
I can't recall 25% year over year for the groups, right? Sometimes tech would do it, sometimes energy would do it. But as a group, 25% year over year, wow, that would double the size of the economy in about less than 4 years.
Rule of 72 says so, right? And I think something that's interesting about this is that there's some elevated inflation, but there's also really high growth. So we're in a high growth with some inflation environment. That's still a good environment for markets.
All right, this was the bad news.
Oh.
So if we go back here,
call that an ouchie.
That's the 2022 9% peak inflation.
Yeah.
So it's trailing 12 months. It was 9% inflation. And it was coming down pretty close to 2. And then epic fury.
That's right.
You could see the past 2 months. So 3.8%, nearly half of that was just in the past 2 months with gasoline, everything else. So that would have normally been bad news. I would have thought it led to a correction with the higher inflation. But there's more bad news on what happened. There's gasoline up 110%. So jet fuel, diesel, massive increases.
Yeah, but you know what? You know where it's worse? There's about 50 countries it's worse in. The highest praise.
Okay, gasoline. Here, we're a little over $4.
Yeah. The highest price in the world for gasoline is Hong Kong at over $15 a gallon, US dollar equivalent.
So they're buying the oil from Iran, refining it, and then they're making people in Hong Kong pay the highest price, right?
Yeah.
So they get it at a discount from Iran. They have the refineries over there, and then they're like, well, we never really liked you guys because you were independent, and you protested. So here, you could just pay $15 a gallon.
$15.
Wow.
The U.S. is about the middle of the pack.
If they could drive to California, they could get it half price. And who gets the cheapest gasoline?
Libya, 9 cents a gallon. Libya, obviously. So a lot of these countries, they do a lot of supporting of the gas prices.
Brazil was doing it too.
Yeah.
Where it's like welfare or subsidy.
Yeah,
right?
That's subsidy at the pump.
But I don't think 9-cent gas would be worth living in Libya.
No.
Iran
comes in at number 2 at 11 cents. So there you have it.
At 11 cents.
Yeah.
Well, here This surprised me. So how much is oil right now?
$101 a barrel.
Now, if I want to buy oil in 2036, what am I going to pay?
55. I can't drive 55.
I can't figure this out. But oil is expecting, now these are the futures.
Yeah.
So this is the market expectation of what the price is going to be. The 55, I don't know how to explain that. But this would be April of 2027, closer, we'll call it $75.
Yep.
Wow, that's a pretty long wait.
Yeah.
So it takes almost a year to get back closer to 70 based on what the futures are saying.
Yeah, what the futures curve will do over time as it comes into the front contract month, you'll see some adjustments particularly in the first 2 or 3 years of the curve. The back end, I think, is almost always at 55.
It says it's coming down a lot slower than people expect.
That's right. The entire curve has actually moved up over time.
That's sticky inflation,
Yeah.
I think. Well, I thought with 6 million barrels a day, U.S. is exporting 6 million barrels a day.
Yep.
So it has to come out of storage. I would have thought this would have been lower. This is how many barrels are at Cushing, right? Storage. And so 20 million barrels is about the low. 45 million barrels is about the high.
Right.
I would have thought that with 6 million barrels a day going out, U.S. being an exporter of our inventory, right?
Well,
This would have gone down faster.
at $100 a barrel, I think I might turn
This
some
is-
spigots on that I haven't turned on in a while.
Here's the beginning of epic fury right here.
Yeah.
Then they turned on all the spigots as the price
That's
skyrocketed. And you got 32, 33 million barrels. Now we're 27 million, but still pretty close to the low amount of storage. It's going to take a while before you have too much. Now here's the other bad news.
30-year yields. 30-year yields going over 5% for the first time in, well, a long time.
To cover what this means, this is actually setting the stage for the next correction. Because if I'm a pension manager,
Right.
and I do my actuarial calculation, if I'm going to pay the policemen and the firemen their pensions, and I need to make an average of 5%, I can guarantee it in a treasury
Yeah.
now over 20 or 30 years. So as an actuary, right,
Mm-hmm.
even if the price goes down to the treasury, as long as I'm getting my 5 in cash and it's guaranteed to mature at what I paid for it, I'm going to start shifting money over there. But you said the magic number maybe 6% where it has an impact on equity.
Yeah, I think it's a little over 6%. That's kind of a technical view.
Okay.
Like where has price? So we've been in a pretty broad price range for rates for the last couple of years. To me, it looks like it's going to want to try to go higher.
The yield.
The yield, yeah.
That's okay. That's a warning on the bond side.
But we are in a growth and inflation environment, so that doesn't mean
That's not stagflation.
that's not stagflation. It's not 1970s Jimmy Carter stuff.
Okay. Dow up 4.5%, going back over 50,000, right? NASDAQ, wow, 17%. It was down for the years significantly here. Boom. So at the end of March, just it corresponds a lot to the earnings and the expectations.
Yep.
But 17%, AI is having impacts on productivity, and that's why you've got GDP at 3.7%. What's working, what's not? Explain this chart to us, because this is bad. See the white line, that's bad. This is good. See the yellow line.
So
Both of them were kind of bad over here. So something changed in March, and show us what's working and obviously what's not.
yeah, so this is two sides of the AI coin, right? So you have software. There's fears of disruption in the software market.
I'm just going to let Gronk write my software.
Not only that, but
I don't need Salesforce.
is there massive margin compression in the products themselves? Not that people stop using them. At the same time, you're building out the AI economy, let's just say, And
You need memory.
There's a massive demand, and with not as much supply as necessary for things like chips and memory.
Okay.
And so you're seeing this big inflection point. What's interesting about that space
Because both of them are tech.
is, but
Usually they move together.
on the memory side, well, you're starting to call it something different now, right? You got AI tech, and then you got software tech.
Okay.
And software tech is unloved. You start looking at these things, you're like, hey man, these things are pretty cheap. However, try catching a falling knife. Not a recommendation.
Maybe it's tax loss selling time.
But there may be a spot at some point.
Okay, top and the bottom, just pick a couple of each.
Yep, big theme. Top end, this is the last 3 months. Intel 150, SanDisk up 130, AMD, Dell, Micron. You can see the trend there. Worst performing.
All up over 100%.
Yeah, Tractor Supply down 45%. That's
Wow.
crazy.
What happened there? Builders First Source, that's Dallas,
Yeah,
down 37%. I mean, they were they've always been a great performer. But man, something in the home building is not good for them.
yeah. Pool Corp, which is pool supplies. I guess everybody's deciding to go do their own pool. And then you have some software companies in there: EPAM, Zotis, Insulet. I'm not sure if Insulet's a software company, but you got a couple of software companies in there too, and International Paper.
All right, thank you for tuning in. We'll be back next week with your fast-paced tour of the global financial markets. You can go to networthradio.com and contact us there. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.